and welcome to the CNBC TV 18 Mumbai studio. I'm Ekta Batra and you're watching Your Stocks this Monday afternoon. Well, it's turning out to be a session where it is quite steady. We're off the day's high, but nonetheless, the mid-cap index is seeing a marginal bit of an outperformance at this point in time. So up around 0.6%. We have the Nifty, which is up around 87 odd points, up around 0.4%. So as of now, the Bank Nifty is recovered from the day's low, just about flattened out. But we have a lot of stocks which are gaining individually. So we do have the PSU banks, which are top of mind. UCO Bank, for example, is up around 17 odd percent. IOB, Punjab and Sindh Bank, just a couple of examples which are coming through in terms of strong stock movements. Remember that there was a strong movement on Friday with regards to the PSU banks, in fact, for the entire week. And that continues into today's trading session. On the downside, to watch out for stocks such as UPL, which has really taken it on the chin from the Nifty space. It's lost around 10% of its market cap at current reckoning, and even a couple of others such as Shree Cement, Bharti Airtel, both of these stocks under pressure. But joining us today, we have Astha Jain, research analyst at HEM Securities, and Vaishali Parekh, head of tech research at Prabhudas Lilladher, to answer all of your stock queries this afternoon. Vaishali as well as Astha, welcome to the show. Vaishali, before we start off the show in terms of queries, a quick check from you in terms of how you would approach maybe the PSU banks today.
Good afternoon, ladies. Yes, so PSU banks, I think near-term round is done with. But well, there are few stocks like IOB, Union Bank and all, they are still continuing. But if I were to talk about PNB, Canara Bank, Bank of Baroda, they are taking a breather. And in fact, I'm seeing some more momentum coming in HDFC Bank and ICICI Bank. So I guess among the front line, there is a shift to the private sector.
Okay, all right. Well, let's get in our queries now. We have our first question. Reena Mehta writes to us from Haryana. She holds 50 shares of JSW Steel, which he's bought at around 700 odd rupees. And she wants to know what to do, whether to hold or sell this particular stock. So she's sitting on a profit at this point in time, wants to know what the future prospects of this would be. Astha, over to you.
Hi, good afternoon. Talking about this counter, first of all, recommendation, it is hold from my side. Target can be set at around 890 odd levels. So talking about this counter, the results which came in, there we have seen some sort of decrease in the EBITDA, and in fact, the sales volume have also decreased because what we have seen that the coking coal prices have seen some sort of increase around 25 to 30%. So that has mainly impacted the profitability. But going ahead, the way the management is incurring the capex of around rupees 51 billion, I think that is positive for this company. Along with that, what we are seeing that management is also quite optimistic regarding the sales realizations, and they are expecting exports to improve going forward, basically in the Q4 of FY24. So looking after all these factors, I think in the medium term also we can see some sort of uptick despite the results being moderate, and hence we are recommending hold on this counter with the price target of 890 at the current levels.
Okay, all right. And technically, what would you recommend on this one, Vaishali?
Technically, actually, my observation is overall full metal sector is doing very well. And JSW Steel has not comparatively participated to that level, but the trend is pretty decent. So I would say further conviction comes around 830. Today, we saw a spike going towards 830, 832, but it's just hovering around these levels. So I would say keep accumulating. In fact, she could add more with the support of 800 because technical target comes to 860, 880 levels. So it's a buy and hold.
Okay, all right. So that's on JSW Steel, but we have a query coming in on a PSU bank. Bipin Joshi writes to us from Ahmedabad. He holds 100 shares of Bank of Maharashtra, which he's bought at 50 rupees. He wants to know what to do, whether he should stay invested or exit. So currently sitting on a good amount of profit there. But remember that at one point in time, the 52-week low for Bank of Maharashtra stood at around 22.8 rupees. So that's the kind of rally that you've seen, all the way to around 63, 64 odd rupees, sitting at a fresh 52-week high today. So what would you recommend in that context, Vaishali? A lot of the gains are probably already done for Bank of Maharashtra, or do you think it has more to go?
Actually, we have seen this one-way rally coming right from 40 plus, say around 43 levels to now we are at 63. So in between, whipsaws cannot be ruled out. But now that I'm looking at larger period time frames, say on a monthly chart and all, I think this stock is ready for a target of 70 plus. So I would say if not in a hurry and for a longer term perspective, this can be held on for a target of 70 plus. And if for a short term, just hold with a trailing stop loss.
Okay. All right. And what about you, Astha? Well, Bank of Maharashtra has not done too badly. Its profit has risen over 30-odd%. Net interest margins have been stable. What would you recommend to the investor?
Yes, so 2,000 crore per quarter operating profit, 1,000 crore per quarter net profit. So they have reached definitely certain milestones. In fact, if I'm looking their other ratios also, whether we talk about cost to income ratio, I think that is at the lowest of around 36%. So I think this bank has really proven its capabilities on the financial performance front, and that's why we are seeing such a strong rally. Going ahead also, we are expecting the bank to continue its outperformance on the fundamentals part also, and that's why we are positive on this counter. We have already recommended this stock. So I think we have recommended it at the level of 40. So now it is at 63. Still we are positive. So I think one can continue remain holding in this stock with a price target of 70 to 75.
Okay, all right. Well, let's get in another question now. Balu writes to us from Bangalore, holds 10,000 shares of Take Solutions, which is bought at around 28 rupees, and he's bought it in Feb 2023. He was focused on the short-term gains for 6 months and now wants to know whether he can sell the shares now and book profit, or should he remain invested. So he's sitting on a profit as of now when it comes to Take Solutions. He's sitting on a decent amount of gains, in fact. So what would you recommend, considering that the stock has rallied very significantly all the way from, I think, 12 odd rupees, which was its 52-week low, to over around 34 or almost 34 odd rupees. So what would you recommend in that context, Vaishali, to this investor?
I would say, well, the rally doesn't seem to be over. Near-term resistance definitely comes at around 36 levels. So that would be the level that he can book partial profit. But if this stock moves above 36 levels and sustains above that, then I think it's ready for 40 and higher levels. So I would say keep a strategic trading strategy. I mean, book partial profit at 36. Wait for a dip if you get a chance to add more, and add more even if it goes above 36 levels. So that would be the way to look at this stock.
Okay. All right. Well, what would you recommend? Astha on Take Solutions comes out with its numbers on next Tuesday, which is on the 13th of Feb. What would you recommend?
So I beg your pardon, we don't cover this stock, so I cannot comment on this stock.
Okay. All right. Any alternative within the space?
See, in IT space, one stock is really gaining our traction. Right now, it might not be, moving so high, but Allsec Technologies is looking good to us. So if someone has to look, I think buying on dips is a better strategy for this counter, because the way this company has posted its results, they were really outstanding. So, the strong growth they have posted in their bottom line as well as top line, despite what we know about the IT industries going on right now. So, Allsec Technologies is one of the counter which we are recommending right now.
Okay, all right. So that's on Take Solutions and an alternative in terms of investment coming in there from Astha. Well, we have Meena More, who writes to us from Mumbai. She holds 150 shares of Roop Mobile, which she's bought at around 1,200 rupees. So sitting on a profit there. Wants to know what to do with this particular investment. What would you recommend to Meena? Astha, you go first.
Okay, so talking about this counter, first of all, the results which they have shown, there were some sort of muted numbers, because we have seen the drop in the ILD volumes, as well as there was some delay in their deal ramp up. In fact, management has also lowered down its guidance from 20 to 25%. Now they have guided for the revenue guidance for FY24 to 15 to 20%. So I think all these things, when the guidance, we see if the management is lowering down its guidance, then that is not taken good by the street, and they are not taken it in the positive way. So that is why we are seeing some sort of pressure on the price. So I recommend, if it is possible for her to book some sort of profit, then it is a better choice as of now. So book partial profit at the current level and keep whole remaining counter. I think maybe we can see the price level of 1,675 going forward in the longer run.
Okay, all right. And Vaishali, any view on Route Mobile on the technicals?
I would say actually it's not showing any clear trend. It is actually consolidating at these 1550, 1600 levels. So I would say that, well, if 1550 levels break decisively, then it's an exit for me, because I think then it can slide further down towards 1400 levels. So, well, observe a stop loss of 1550.
Okay, all right. So that's on Route Mobile. Well, for the markets, and there's a little more of pressure, as you can see, for the Bank Nifty. So it's just about flitting between red and green as we speak. Currently down around 56 odd points for the Bank Nifty. The advanced decline ratio holding even keel, so around 2,200 stocks advancing to around 1,989 stocks declining. Remember, on Friday, we had hit a record high for the markets on an intraday basis, but we did come off that. The markets seem to be giving up a little bit of their gains at this point in time as well. So let's see how the last 1.5 hours pan out. But as of now, as you can see, the Sensex has also slipped into the red, just about flattened out for the Sensex, and the Nifty higher by only 30 odd points. Slip below 21,900, 21,886 is currently where the Nifty is at. The mid-cap index marginally holding with gains, or rather relatively outperforming when compared to the Nifty and the Sensex, so up around 0.4% currently for that particular index. The pressure seems to be coming into the banks, because the Bank Nifty, as you can see, is now down around 90 odd points. We have probably the Nifty Bank constituents, which should probably come up for you. Pressure coming in for the likes of State Bank of India, Kotak Mahindra Bank, to name a few. Well, we need to take a break, but before that, it's now time to shine a spotlight on the backbone of our economy. A celebration of your impact on India's success story. CNBC TV 18 and HSBC India proudly present India's biggest SME awards platform, honoring the small and medium enterprises that drive our nation's growth. Nominations are open now, and we invite you to become an SME champion. Your dreams power India's progress, and it's time to celebrate them. Scan the QR code now and be a part of this monumental recognition at the SME Champion Awards. It's not just a platform, but an opportunity for you to step into the limelight. Welcome back. You're still tuned in to Your Stocks this afternoon. We have with us Astha Jain and Vaishali Parekh to answer all of your stock queries. Let's get to another question now. We have Ramkrishnan, who writes to us from Chennai, holds 50 shares of Nuvoco, which is partly allotted during the IPO, which is at 417 odd rupees, and for the past 2 years, and he wants to know what to do, whether he should hold or sell at current levels. Well, that's a Nuvoco, but before that, we do have the Alembic Pharma numbers on your screen. The EBITDA has risen around 7% on a year-on-year basis. Margins have come in just about flat on a year-on-year basis for Alembic. The stock, as you can see, is up around 5%. More details should flash by. The profitability is definitely done better than expectations. So 180 crores is what they've reported versus our poll of around 140 odd crores, and a largely in-line revenue number. So maybe the street likes the stable operational performance as well as the flat amount and the rise in profitability, as you can see this quarter. Well, in any case, what would you recommend, Vaishali, or Nuvoco?
Actually, the stock has been at a support level, but we need some confirmation. If the stock moves above 380, I think, because for a very long time, this stock has been only consolidating. I mean, I would say it's a band of 415 to say around 330 levels. So I would say still hold this stock, because once if this stock moves about 380, 400 levels, this can in all likelihood go towards 450. So that is how I would look at it.
Okay, all right. Technically, Vaishali is bullish in terms of at least maybe a long-term target for Nuvoco. But Astha, what about you?
So talking about this counter, yes, this counter was showing some sort of consolidation on the charts, and I think fundamentally, I think the reason was that now in the last 10 quarters, they have shown the highest realization per ton, that is of rupees 1048 in the results which they have given in quarter 3 of FY24. So that might be one of the reason. Although this company has shown some sort of degrowth in their volume, but they stuck to their policy of value things, and that's why we are seeing the realizations are quite high. Their premium products are also working well because it constitute around 36% of the total company product portfolio if I talk about the premium products. And if we see the macro environment also, looking after like PM Awas Yojana, I think in West Bengal also the PM Awas Yojana around, there are certain lack of houses which are really need to be constructed over there. So that will be giving an impetus to the company along with the Bharatmala Yojana also. Because road construction will also be happening in the east, and this company is having its foray in the east. So I think all these, macro things will help the company in showing some sort of a demand pull, and that is why I think this company is a good for the longer term point of view. I recommend hold on this counter with the price target of 395 to 400 at the initial level.
Okay, all right. Well, that's a Nuvoco. Let's get in a quick query now. Nikhil writes to us from Bangalore. He holds 204 shares of Jindal Drilling and Industries, which he's bought at around 734 odd rupees. So he's sitting on a bit of a loss there. He wants to know the target for the short term. Well, Vaishali, over to you on this one. Short term target for Jindal Drilling. It's, rallied from those levels of around 200 odd, but it's come off from those levels, those highs of over 900.
Well, I would say actually the trend is showing some signs of weakness. But what is important from here is that it should hold on to 690, 680 levels. And if that is held on, we can see a bounce back coming. So near-term target would be from here 760 to 780 levels.
Okay, all right. That is on Jindal Drilling. Let's get in a quick query now. Jayant Gopal writes to us from Delhi. He holds 400 shares of DCW, which he's bought at 62 odd rupees. He wants to know what to do and what should he probably expect in terms of the stock and whether he should hold or sell on this one. Asta, would you have a call on this company?
Okay, so talking about DCW, basically it is into the chemicals, and their chemical is like portfolio is from the commodity chemical to intermediate chemical. They're providing all these and specialty chemical also. Now, what is compelling about this company is that although the results in the quarter gone by, that is the Q2 of FY24, because they have not still come out with the Q3 of FY24 results. So commenting on those results, the results were not that strong. But now the company is looking after the capex of around 125 crores. So that will be helping the company in expanding its CPVC facility. So I am looking that capex as a major positive for the company, and that's why I'm positive on this counter, recommending hold with a price target of rupees 85.
Okay, all right. And Vaishali, would you have a call on this one? It's rallied quite significantly, up around 40% in 12 months.
But definitely, actually, now that I'm looking at all the charts, I mean, the weekly as far as long as also the monthly charts, it's getting into a very strong uptrend. And I think it's a hold for higher targets, because even on a weekly chart, it has given a breakout above 64 levels. So this stock should continue to do well. And I think the near-term target comes around 80. So I would wait for a target of 80 for now.
Okay, wait for a target of 80 on DSW. That's the technical call coming in. Sharad Shroff writes to us from Hyderabad. He holds 1,000 shares of Cupid, which he's bought at around 890. So he's sitting on a good profit there. He wants to know what to do, whether he should probably hold or sell this particular stock. Let's start with you on this one, Asta. Cupid, you know, a strong performer. He's sitting on good gains. Do you think it's time to probably cash out a little bit?
So if there is no hurry to cash out, then I think remain invested is a better option, because this company is again, they have acquired the land and increasing their production capacity, which will be the 1.5 times higher than what they are producing right now. So, and that too within the time frame of 18 to 24 months without any debt, incurring any debt, all through the cash, internal cash accruals. So I think that is the major positive for this company. And the results they have posted were also very strong. So I think if there is no hurry to take out the cash, then it's better to remain invested. Initial price target can be set at around ₹1,000.
Okay, all right. And Vaishali, would you have a view on Cupid?
Definitely. Actually, it has a very strong uptrend, a very small consolidation that it has witnessed right now. So I would say that, well, keep a stop loss of 1660. And I think in all likelihood, I would look at a target of 2000 to 2200 from here on. So yes, it's a hold.
Okay, all right. Vaishali as well as Astha, thanks very much for joining in and taking us through all of those queries that we've had. We've had a whole host of queries within the broader markets. For today, we are seeing the mid-cap index manage to outperform marginally as compared to the Nifty and the Sensex. We have a couple of stocks which are buzzing around. Case in point would be Alembic Pharma, which just came out with its numbers and has reacted positively to it. It's up around 4%. That's all the time that we have on this show, but do remember to email us your queries. We'll address them with our experts. Closing bell up.